All right, good afternoon, everyone. Thank you so much for attending our home buying seminar this evening. We are recording this entire presentation, and later this week we will email a copy of this presentation, the PowerPoint slides, as well as the recording to everyone. So definitely take notes throughout the way, but also know that we'll be sending this presentation out later this week. First, I would like to introduce myself. My name is Amanda Arnold, and I am the Vice President of Marketing and Business Development here at Credit Union of Georgia. We kind of have a panel of guests with us today that are going to walk you through the home buying process, and I will introduce those folks right now. But first, let me go over the agenda with you for tonight. Sorry, we're having a little bit of technical difficulties. Okay, sorry about that. Okay, so here is the agenda for this evening. I am going to do some introductions of our panelists that we have with us today. Then we are going to talk about how much home you can afford, followed by credit requirements, the importance of having a realtor in the home buying process, the home buying process as a whole, the home appraisal process, as well as the home inspection. Then we're going to talk about closing attorney responsibilities, home buying tips, and then we'll have Q&A. We will also have Q&A. You can use the chat feature throughout this presentation, and we will answer questions as we go through. So first, let me introduce your panel of experts that we have with us today. With the Credit Union of Georgia, we have two of our mortgage originators with us. We have Joe Minna and Bakari Nelson. They will go through a lot of the presentation with you. Both of these folks are on staff here at the Credit Union, and they work here in the office where I am. They're awesome. I've used them personally several times, so I definitely recommend them for your mortgage needs. The next person that we have with us is our realtor, and that is Rebecca Cooper. She is with Cooper Southern Homes with Atlanta Communities, and she will be walking you through the realtor process. We have Alan Rainwater with Alan Rainwater Appraisers that will be talking about the home appraisal process. And then we have David Sherman with Sherman and Phelan as our closing attorney for tonight. And now I will kick it off to Joe and Bakari to start the mortgage department information.
Thanks, Amanda. Welcome everyone. A couple things that we want to talk about, as you can see on the screen, is the personalized and professional service. The one thing we like to do, Bakari and myself, is once we talk to you on the phone or in person or however you make, or email, or whatever it is, we like to figure out what exactly we're looking to do, whether it's a purchase, first-time purchase, or a second or third or fourth purchase. And we even talk about refinancings as well. We like to figure out and ask a lot of questions just to make sure that we get you in the right type of product, whether it's a 15 or 20 or 30-year term, how much down payment is. There's a lot of things that go into this. We like to kind of do a triage, if you will, to figure out what exactly we're going to be doing, just to make sure that the product that we recommend best fits your needs. I've been in the mortgage business for about 25 plus years, and Bakari's been in the business for how long, Bakari?
Roughly about 10 years.
About 10 years. So we've got a lot of experience. The other thing that we have is we have a lot of knowledge behind the scenes. We've got an underwriter that's been in the business since 1976. They've been there for a long time, but and we also have, as you'll meet, Alan Rainwater, our appraiser, and David Sherman, our closing attorney. They've also been in the business for a long time. So we've got a lot of experience behind us. If there's something that we don't know, we can absolutely get an answer for you from one of our people that we use a lot. And I like to use just a couple different appraisers, a couple different closing attorneys, just so we can get the best service for you. Sherman and Phelan gives us discounts as credit union members, so I like to send them as much business as we can because they're typically the least expensive and they offer the best service. We do have an online application. It's online at the credit union website. We typically can email you a link, or you can go there at any time and do an application. One thing to note is on the application, we do not ask for your social security number or your date of birth. We try not to have that stuff floating across the internet as much as possible. Not that the whole world doesn't know what your social security number and date of birth is, but we try and avoid that if we can. The other nice thing is that we are able to close, in other words, sign all the paperwork at the very end, wherever you'd like. A lot of the refinances that we've been doing lately with these low interest rates, we close at the member's home if it's convenient, or at their place of business, or at any one of our credit union branches. And we also close at our attorney's office. So we try and make it as convenient as possible for you when we say, quick and painless kind of thing. But typically on a purchase, your closing should take about maybe 25, 30 minutes. A lot of times the realtors will converse about exchanging keys and garage door openers and things like that. But signing all the paperwork shouldn't be more than, 20, 25 minutes. Sometimes it takes a little bit longer if there's questions regarding any homeowners association dues or pool passes or anything like that goes along with buying a new home. But you can plan on at least 30 minutes to do your closing on a purchase. We do offer very attractive interest rates and very attractive terms. The one thing that we're doing currently is that we're paying $1,000 towards your closing costs, and that's going to run through the end of the year. But I did get approval that anyone who mentions that they did attend the home buying seminar, we will extend that $1,000 credit. So if you're looking to buy a house and it's in March, just remind me that you, or Bakari, that you attended the seminar, and we will absolutely honor that $1,000 off closing costs. The other nice benefit of using your credit union is that we are exempt from something called the state intangible tax. That's a fee that all other lenders have to charge, and that's at a rate of $3 per thousand. So if you're borrowing, I don't know, $300,000, the intangible tax would be $900. You don't have to pay that because you're a credit union member. We are tax exempt, and we are exempt from that fee, which means you are exempt from that fee. So it's another nice benefit of using your credit union. We do offer 15, 20, and 30-year terms. We even have a 7-year loan option. If someone's looking to finance a small amount, we offer a 7-year as well. And let's go to the next one. So let's talk about the application process. Once you complete the application online at the credit union website, whether you go there yourself or we send you the link, either way is fine. The application comes to us directly. Myself or Bakari will contact you, whether it's a phone, a text, an email, something. We'll send up smoke signals, we'll do something to contact you to let you know that we did get your application and that we are working on it. If for some reason we don't have your social security number and date of birth on file, we will ask you for that. And typically we will run one credit report, an Equifax report, to see how your credit scores are. If you need us to run all three, which we will have to do at some point, we will do that as well. And we will go over your credit report with you and discuss what's on the report, what your credit scores are, and if they're low, then we'll give you some ideas on how to get them higher. If they're high, then we'll just let it ride. But the application shouldn't take you more than maybe 5, maybe 10 minutes to complete. You will automatically get an email back once you click submit saying, thank you for making application at the credit union. Someone will contact you shortly. In the meantime, gather your financials like your pay stubs and W-2s and things like that. So you'll get that right away. And you can always pick up the phone and call us. Be more than happy to go over any questions or concerns that you might have. We like to figure out what exactly we're doing, whether you're selling a home and buying a house, or if this is your first time, what to expect, things to look out for. I guess one of the main things is we'll talk about the home inspection, but we've got a lot of information to go over. Hopefully I don't go too long here. And then once we receive your application, we will go ahead and start the processing. The processing is just gathering information, gathering your pay stubs, your W-2s, bank statements. If the majority of your down payment's coming from your credit union account, we have access to that, so we can print that out and put that in your file. If it's coming from Bank of America, then we'll ask you to provide your 2 most recent statements. If you're selling a home and using the down payment from that to purchase a new home, then we'll just ask you for a copy of the sales contract so we know approximately how much money you're going to be netting once you sell your other house. We can close loans on the same day. If you're selling a home and buying another one, we can do them what we call back-to-back. That's not a problem. What we try and do is use the same closing attorney to make the transaction a little easier, because at closing, and I know David will talk about this toward the end, but at closing, you will need to wire your money. If you've never wired money, it's not that difficult, but it does take a little bit of paperwork to get the money sent from your credit union account to the closing attorney. But we'll go over those details with you so that you're comfortable. Like I say, if we're doing a back-to-back closing, then obviously you don't have to wire money. It will already be there from the sale of your existing. The next thing is, once we gather all your information, we will then send your file to our underwriter. Our underwriter is also here at our Giles Road location. He's literally in the next office next to Bakari and myself. He will underwrite your file, and if there's anything that's missing, then he will come and hit Bakari and I over the head with the frying pan and say, hey, you forgot to get a pay stub. So we will do that. And we typically underwrite the files the same day that he gets them. So from a processing standpoint, I can just tell you what's out there in the industry. It takes underwriters sometimes 48 hours, sometimes 72 hours to underwrite a file. We can do things pretty much the same day if we're pressed. And another question I get is, well, how long does it take from start to finish, from when I do the application to when I close? Legally, we can close a loan in as many as between 8 and 10 days. And that's just because of disclosures that we have to send out. We've got to get those out in a timely fashion. Then they have to come back and we have to wait 3 days for those to for you to review them. So legally from start to finish, I'd say about 10 days. But on average, it's less than 30 days to get closed. If you need something sooner than 30 days, we absolutely can do that. We've got the process down. We're really efficient. My processor is a couple doors over from me. Bakari's next door to me. My underwriter is next to them. So we're all in one spot. So if we need something quickly, we can absolutely get that done for you. And from a competitive standpoint, when it comes time to submitting applications, sellers are, and Rebecca will talk about this, but sellers are really anxious about getting their home closed. And the most competitive offer will be obviously a cash offer, but if it's subject to financing, the quicker we can get you closed, the better your chance is to actually getting the contract. Because if we submit a contract and it says we can close in 2 weeks, that's going to go a lot smoother than if someone says, hey, it's going to take me 45 days at Bank of America. Well, good luck. It'll be more than that at Bank of America. But if they say that, then that puts your offer at a more competitive standpoint. So there's a lot of little things along the way that we will try and tell you and work with your realtors as well to help you along the process. Because like I tell everybody, the hardest part about this whole process is finding the house you want and then getting it under contract. Once you do that, leave the rest to us. We'll take it from there. Let's see, next is approved and clear to close. That will come from our closing attorney, from our underwriter. We will then let everyone know, let your realtors know, let everybody know that, hey, we're good to go, or hey, we're just waiting for home insurance or something like that. But once we have the clear to close, we will then submit our loan documents to the closing attorney, who will prepare what's called a CD, or a closing disclosure. That has all the final numbers on it. If there's something that's incorrect on there, we will absolutely get it corrected. Sometimes things change along the way, like sometimes the seller will agree to pay closing costs in lieu of repairs or anything like that that comes up. If the sales price increases or decreases for whatever reason, we can make adjustments there as well. And then we will fund your loan. We actually wire the money to the closing attorney from the credit union, so the loan closes in our name. That way you're exempt from the intangible tax. We will then fund the loan, and that's it. Then the hard part is moving your stuff. So, but that's pretty much the process from start to finish. I kind of went fast, but I'll be more than happy to answer questions along the way as we get things going. Calculating how much you can afford. This is, I get this question a lot on getting pre-qualified. And I always tell our members that because these interest rates are so low, like the going rate today on a 30 years, 3%. That's just, it's been, I think the lowest we were was what, Bakari, like 2.5. We were like 2.5 for a while. That was, everybody was refinancing. So, but right now, because interest rates are so low, our members are qualifying for a lot more house than what they would want. And kind of a rule of thumb is I typically can pre-qualify you over the phone, and Bakari can do the same. We just ask what your gross monthly income is. We take 40% of that, and then we subtract out any recurring expenses. And the expenses that we look at are any car payments, student loan payments, even in deferral, and credit card payments. We do not look at your light bill, gas bill, cell phone bill, rent bill. We don't look at that. So we will take 40% of those numbers, subtract out the expenses, and whatever's left, we will kind of work backwards and figure out what the mortgage payment, we figure that out as a payment and then calculate how much the loan amount would be. So most times the amount that I come up with is a whole lot more than what you want. Once I know that, then we can prepare what we call a commitment letter or an approval letter for you and your realtor. And you need that to go shopping for a home. And I know Rebecca will talk about this as well. But typically realtors will not take you around on Saturday afternoon and show you houses unless they know you've been pre-approved for a home. And to do that, Bakari and I can do it pretty much over the phone. If we need to run a credit report, then we'll ask you to complete a loan application. You know, I'm sure everyone knows how their credit history is. If you're not sure, you can go to any one of the free credit report websites. In the state of Georgia, you can, for free, you can get a copy of your credit report once a year. So you can do that as well. You can go to Equifax, TransUnion, or Experian, and they will show you how to get a copy of your credit report. If you have issues on your credit report, send it to us. Be more than happy to kind of put our counseling hat on and figure out how to get your credit scores up. There's a lot of ways that we can do that. There's kind of what if scenarios on the credit reporting agency's websites that we can plug in that says, you know, if we pay this charge off, how much would that increase our credit score? Or if I paid off a loan, how would that affect my credit score? That we call it a simulator, a credit score simulator. So we can do that for you as well, but probably a good idea to go ahead and get a copy of your credit report if you're not sure. If you know your credit history is fine, nobody's knocking at your door for payments, then we're going to be fine. Okay, the next section is going to be credit requirements. So Bakari, I'll turn it over to you for that.
Oh, good afternoon, everyone. We're going to talk about qualifying for a mortgage. And when we look at qualifying for a mortgage, we look at the 3 C's in lending, and that would be credit, capacity, and collateral. So when we talk about the credit, we look at the credit score. If you have any negative credit, any derogatory credit that's showing up that may affect you from qualifying for a loan, and the length of your credit history. Those are things that we look at on the credit side. And capacity, we look at your income, how much money that you make annually gross, and we take it monthly. And as Joe said recently, use the 40% scenario to see if you qualify. We look at the employment history and your savings history as well. And collateral. Collateral will be the home that you're looking to purchase. We look at the appraised value, the condition of the home, and if there are any liens, outstanding debts, or anything like that on the property. Now, when it comes to the credit score, what we do is a tri-merge credit report from all three of the major credit bureaus. That's Equifax, TransUnion, and Experian. And we'll look at the middle score. And we take that middle score, and it has to be at least a 640 or higher because we are a conventional lender. So we take a look at the middle score, and that's what we determine if you qualify and what your interest rate would be. If there are two or more people on the application, we pull a joint credit report. And so we'll take the middle score of both borrowers, and we will use the lower of the two middle scores to qualify you for your loan. When it comes to the derogatory items that we look for, we look at bankruptcies, foreclosures, any deed of lieu foreclosure, late payments, collection, things of that nature. And it determines on which one it is, whether it's a 4-year or 7-year period that you qualify when it comes to bankruptcies and foreclosures. And your credit history, lenders want to see at least 3 trade lines when it comes to qualifying for a mortgage. So if you have the 3 trade lines with a 12-month history and a good credit score, then you can qualify. When it comes to first-time home buyers, sometimes we have members that maybe just graduated college or something of that nature, their first time just starting credit. And we can look at alternative credit there, whether it's a phone bill or rental history or something like that. We can take into account and use that for your trade lines if you have a score, but you don't have any trade lines on your credit report.
And Bakari, didn't you just get a member approved for a loan like that where we used alternate sources?
Yes, we just had a member. She came in. She was a recent graduate of college, living with her parents, but she had a credit score, no trade lines, and we were able to use her rental history and phones bill and use that as far as the alternative credits to qualify her for a mortgage.
The secondary market has, and everyone thinks that it's really hard to get a mortgage, but the secondary market, which is where we underwrite these files to, and we use their guidelines, they've loosened up a little bit. They'd rather see no credit than bad credit. They'd rather see alternate sources of credit, instead of bad credit. So the nice thing is that we will absolutely work with you to figure out how we can get you into a home that meets your needs. And the way these houses are in terms of prices, I think, and I know Rebecca's going to talk about this, but the values just keep going up and up and up. My advice is get into the biggest house you can, and I just think that the market's going to continue to appreciate. But I wouldn't bank on that. But all indications are, and I'm sure Rebecca will talk about this too, is that home values are continuing to go up. There's more of a demand than supply. So the economics 101 says demand is high and supply is low, price goes up. So that's what we're seeing, and we have seen that for a while now.
We do have a couple of questions that have come in. If you can explain what a trade line is, and then if you could also give some examples of what a trade line is.
Okay. What a trade line is, once we pull your credit report, say if you have a credit card or a car payment, and you have a lien on that, it's usually reported to the credit bureau. So that would be considered a trade line. And we look at the length of history for it. So if you have it for 12, 24 months, that's the length period that we're looking for, how long you've had it. And or if you're making your payments on time, no late payments or anything like that. Those are your trade lines for credit cards, card notes, student loans are trade lines.
Thank you.
The second C in that, the 3 C's when qualifying is capacity. And so when it comes to capacity, we look at income. And that's whether you're a W-2 or self-employed member. So we take an average for W-2 income. The last 2 years, we'll get your last 2-year W-2s, take an average of those and come up with your income. And we use, take a look at what your base income is and we say, what is base income? That's the income without any overtime, without any commissions or anything like that. That's just your regular base salary, what you're gonna make there. And so when we look at the base income, we look at the gross, what you make annually, not the net, what you bring home. So that's very important to keep in mind. A lot of people we know, they come in and they think what they bring home is what they should put down, but it's actually what you make before taxes is what we're looking at. Can overtime be counted? Yes, we can count in overtime as long as you've been consistently working overtime and based it over the last 2 years. There's the same if you're a commission employee. We just take the average of your last 2 years commission income, and we take an average of that and base your income on that.
Yeah, we've had a couple of more questions come in based on what you're talking about right now,
Okay.
Bakari. The first one is, what if your job is commission based? Is that bad?
No, if your job is commission based, no, that's not bad. What we do, as long as you've been on your job 2 years, we can take an average of your last 2 years commission and use that for your income.
Perfect. And then we have one more question, and we remember on here that she's a recent grad. What if my average income for the last 2 years isn't much because I didn't work while I was in school?
Yes, what we would do with that is take a look at what you're currently making now from your job. If you have an income letter from your employee stating what you're gonna make, how much you're making there annually, we can take that and use that as a base of income, because being in school is like a job. So we know once you get out and you get started in your career that we can use that type of income and qualify you based on that information.
A lot of times people say, well, don't I need a 2-year history? And like Bakari said, we will count your college as a quote unquote history. So we may ask for maybe your diploma or transcripts or something like that. We're not going to criticize your grades or anything like that, but we're going to see, especially if you got mine. I don't know. Anyway, I'd never get a house. Anyway, but we will look at that as quote unquote your employment history. And we just need a current pay stub showing what your income is, your gross income, and that's absolutely fine.
Okay. And then we just had another question come in about down payment assistant grants. Are there any resources for the members for that?
The one that I know of is the Georgia Dream, where they will gift you or give you 3% toward the down payment. And it's forgiven, I believe, after 5 years. So for instance, just to make the numbers easy, if the sales price is $100,000, the Georgia Dream will do a loan for $97,000, and then they will give you a $3,000 second mortgage that is released after 5 years of making payments. So there are some of those available. And when it gets toward the end of the year, sometimes that money gets used up, and you have to wait till the money becomes available.
And one more question before we move on to the next slide. Olivia said that she had a kitchen job, but she left it in 2020. She's been working remote contract jobs while she works on a certification to get her a better paying job. Is it possible for her to qualify next year, or does she need to work 2 years to qualify?
Well, we would look at, if your W-2 income, then we would look at whatever your most recent pay stub shows your income to be, and then we would verify that with your employer. Because it sounds like you've had some sporadic income in the past, which is fine, as long as we can show, document where you've been for 2 years and have a 2-year history. And if you're doing things to better yourself, well, that's fine with us. I mean, that's what we want to see. But we will look at whatever you're currently doing. And I get this a lot, if you go from a W-2 job to self-employed, then we need that 2-year history of being self-employed. But if you go the other way, if you're self-employed and then you get a W-2 job, then we will use the W-2 income right away. You don't need a 2-year history for that.
All right, we're ready.
Okay, and the last portion on it is the self-employed income. If you're 1099, what we use to qualify you are your last 2-year tax returns for self-employed. So if you have your personal tax returns, you own a business, and business returns if they're available. So that's what we would need qualified as self-employed borrower. And the third C is collateral. When it talks about collateral, that's the property that you're looking to purchase. What we would do then is order an appraisal. So we have our appraiser come out and value the property, do a report and send it back to us to make sure that it qualifies.
And Alan Rainwater, our appraiser, will talk a little bit more about this. And now we want to turn it over to Rebecca. Rebecca, let's talk about the importance of a realtor.
All right, good evening. Again, I'm Rebecca Cooper with Atlanta Communities. I just want to thank the team from Credit Union of Georgia for inviting me to be here with y'all this evening. We're going to go ahead and jump in just with the first things that you need to do or think about as you're getting ready to jump into being a home buyer, whether it's for the first time or whether you've done this before. You know, every market is a little bit different, but I always recommend that the first things you need to do are contact your lender and start working on that pre-qualification process. Honestly, right now, I would even recommend a pre-approval more so than pre-qualification right out of the gate. And we'll talk about that a little bit more in a little bit more detail on the next screen. And then finding somebody to represent you in the transaction. So that person is going to be your realtor. You're probably going to spend, you know, a significant amount of time with this person. I mean, in this day and age, some people are buying homes very, very quickly, and the whole process is going very, very quickly. But oftentimes it can take, you know, months and months for you to find and close on just the right home. And again, that really is up to you as to how, you know, what your circumstances are, how quickly you need to be in a new home, how particular you are about finding, you know, a home. Some people on the first day we go out can find a home and write a contract and close 2 weeks later. You know, other people, it might take, you know, 3 months, 6 months, 9 months, even 12 months to get through the whole process. So again, the realtor is somebody you're going to spend a lot of time with. So you definitely want it to be somebody who, you know, personality wise, you feel that it's, you know, a good match, and certainly somebody you trust. So sharing a lot of information with this person. So you definitely want somebody who you know is going to be in your corner looking out for your best interest in the transaction, and somebody you certainly feel like you can trust to lead you through the process. And if you don't know of a realtor, I definitely recommend get referrals. So ask your friends, ask your relatives who they know, who they've used. Obviously, these are people you trust. You trust their opinion, so look to them. I'd say probably 90% of my business comes from referrals. So that's a great way, if you don't already have a realtor, to find somebody, is to ask friends or family for that referral. And it's also, so a lot of people, if they don't have somebody, the first thing they do is they get online, get on Zillow or Realtor.com or Trulia or Redfin, you know, and they just start looking for houses in the area that they're interested in, which is fine. I mean, that is a good way to get to know, you know, what's out there and what's available. But a lot of people don't realize once you start making phone calls based on what you're finding online, the person you're being routed to more than likely is the listing agent, and that person represents the seller in that transaction. So yes, they're going to answer your questions and give you some information about that property, but they're not representing you as the buyer and your best interest in that transaction. The same thing if you're driving around looking for a house in an area that you're interested in and you call the number, the name off of the sign in front of that property, that's the same thing. That agent has a written listing agreement with that seller saying they're going to represent the seller's best interest in that transaction. And then finally, the one that people I think really don't think about or don't realize is if you walk into a new home subdivision. And finally, we're seeing a lot more new construction in Atlanta, which is fantastic. So a lot of times people start driving around on a Saturday or a Sunday afternoon and pop into a new home subdivision. And the on-site agents there are fantastic. They're always very nice, very friendly, very knowledgeable. They will share a lot of information with you. And if you end up going under contract in that new home subdivision, you will work with that on-site agent. Again, I mean, if you're buying a home that hasn't even started construction, you'll probably be working with that person for 3, 4, 6 or more months. But keep in mind that person represents the builder in that transaction. Again, that person does not represent you and your best interests. So that's why I always say, make sure when you start the process, find somebody who's there for you to help you through the process, to represent you and your best interest in the transaction. And know too that typically the commission is paid by the seller in Georgia. So you get to take advantage of having somebody in your corner and represent your best interests, normally without it costing you anything from the standpoint of a real estate commission. All right, if we can go on to the next slide, please. Okay. So once you've got your, you've made your contact with your lender, you've got your pre-qualification, you've got a realtor to work with, we'll start going through the steps of the buying process. And I mentioned on the last slide that we're going to talk a little bit more about pre-qualification, especially in the market that we're in right now, when oftentimes you do have to be able to move quickly, as Joe alluded to. Once you find the home that you're interested in, you know, sellers like to be able to close as quickly as possible. And often as the buyer, you do too. It's really a good idea to have all of your ducks in a row very, very early on before you even find the house that you want to make an offer on. So there's a difference between pre-qualification and pre-approval. At a minimum, you want to be pre-qualified for a loan, which I describe it as information versus documentation. So to get pre-qualified, like Joe said, I mean, he can get you pre-qualified over the phone, you know, probably in a matter of 10 or 15 minutes, which is fantastic. At a minimum, we want you to have that conversation with Joe or Bakari. But I would even recommend taking it one step further and more than just providing information to them for them to make that determining decision whether or not you'll qualify. Provide documentation. So, and Joe or Bakari may want to jump in and you know, if there's anything additional that they want to shed light on that. But I love for you to get pre-approved more than even just pre-qualified. And that means you have gone through the application process, you've provided the documentation, or at least started providing that documentation to them that they've asked for. So again, that's already, you've made an additional step that you're going to have to provide all that information anyway. So when we do find a house and make an offer, we can let that listing agent who's representing the seller know not only have they talked to a lender, but they have already applied for their mortgage and they've already provided documentation. So they're already that much further along in that process toward qualifying and getting their mortgage. So the first thing that I like to do, and we're all different, every realtor is a little bit different. The first thing I like to do when I first start working with a buyer is sit down either in person, or I've done a whole lot of them over Zoom over the last year and a half, as y'all can probably imagine. We'll do an initial buyer consultation meeting. Again, just get to know each other, make sure we're going to be a good fit to work together. This is where I would go through the whole buying process. So a lot of this information I'm sharing with you this evening is what I go over on that buyer consultation, get all of your questions answered, and you know, establish that relationship with you becoming a client of mine, or again, whoever the realtor is that you choose to work with. And another important piece of that, Even if you've bought and sold homes before, I mentioned before that every market is a little bit different. So in that meeting, we also look closely at the market, what's happening in the market as at the time that you're getting ready to look to be purchasing a home. So we look at current market conditions. So once we've done that, then we get you set up on a search. So we start looking for homes. And like I said, the home search process can take a matter of days. It can take a matter of weeks. It can take a matter of months. So that's just up to you. But I will start sending you homes, and the more feedback and information that you can give about what you like, what you don't like, will help narrow down to, us being able to find just the right home for you. Once we've found the home, obviously at this point, we're out driving around, going and visiting homes in person or virtual if that's something you're concerned about, not wanting to go out yet due to COVID concerns or things like that. We can certainly do virtual tours. But again, a lot of folks are wanting to get out there now and see homes in person, so we can certainly do that too. Once you find the home that you have fallen in love with and you say, this is it, this is the home, we'll go ahead and make an offer to the seller. And then we negotiate through, there's not as much negotiation right now with it being such a hot seller's market, but we do our best to negotiate and get terms that will work for everybody. And then once you reach an agreement with the seller, then you are officially under contract. So once you go under contract, the next day, so for example, if you wrote an offer and we negotiated and you went under contract today, starting tomorrow would be the start of your due diligence period. And the number of days due diligence is a negotiable number. So that's one of the items that we negotiate as we're making an offer. But during that time, that's when you have your home inspections done. You contact your insurance agent about getting a homeowner's quote. And I always tell people you don't have to have your homeowner's insurance quote during that due diligence period. The reason I recommend it is because your insurance agent can tell you if that property that you're looking at is in a floodplain and is going to require flood insurance, which can be very costly. So it's just good to arm yourself with as much information as you can during the due diligence period about the property, about the surrounding area, about the neighborhood, everything you possibly want to know to make sure that this is the right house, that this is the one that I'm going to go through with and get to closing. Because if there's any reason that you find out that you don't want to go through with the purchase of that property, as long as you're still within your due diligence period, you can back out of that contract and you lose nothing. You don't lose any earnest money. You're not in default of the contract. You walk away. It's kind of like a free look period for the buyer. And if we can, oh, great, thank you. It's like somebody just read my mind. So once you're beyond your due diligence period, you're going to be preparing for closing. So throughout the whole process, obviously, you want to keep in very close contact with the lender. The lender may ask you for additional documentation or additional information. So again, you just want to provide that information as quickly as you can to keep the process moving as smoothly as possible. Same thing with the closing attorney, and I know you're going to hear from a closing attorney in just a little bit, but again, I just recommend, as soon as they request information to you, just try to provide that information as quickly as possible. And then, as we get a lot closer, within a matter of days of closing, I'll start sending you, or your realtor will start sending you reminders to do things like change your address and set up your utilities, and you'll get information to wire your funds for the closing attorney. So there'll be those last minute things that you'll do, within the last few days before closing. And then closing day, as Joe alluded to, that's a very quick, easy, usually about a 30-minute process. You're signing some paperwork and you're exchanging keys and you're a homeowner. So that's the process in a nutshell. I do want to talk a little bit on the next slide about being mentally prepared financially. So obviously from your mortgage standpoint, you know, the folks there at Credit Union of Georgia have given you that information, but I always get questions about, okay, when do I start writing checks, or when do I have to start wiring money? So those are great questions. And the very first time you're going to have to write a check or send a wire is going to be for your earnest money. That's before you're even under contract. Well, not necessarily before you're under contract, but at the time that you're making an offer, we'll start thinking about how much earnest money we need to provide. It always used to be that you would provide earnest money, and it still is, that's your good faith money that you're saying to the seller, yes, I'm negotiating, I'm making you this offer in good faith. I intend to go through with the purchase of the contract should we come to terms and go under contract. It used to be very common that earnest money was 1% of the sales price. In the environment that we're in right now, in the market that we're in right now, earnest money has become a much more negotiable item, and a lot of sellers are starting to ask for more than 1% earnest money. So I would say be prepared at a minimum at the time that you're making the offer to have at least 1% available. Usually we actually get that money within about 48 hours of you going under contract. So if you make an offer today and we negotiate for a day or two, you know, usually then you've got, you know, once you actually go under contract, maybe 24, 48 hours later, then you've got about another 24 to 48 hours to literally hand over that check or wire that money. But no, you don't have, you've got a matter of a couple of days. So you just need to already be prepared, know where that money is coming from. And then that money will become a credit to you at closing. So that money will end up coming back to you. It's just, again, good faith money that you're going to need to have up front. The next time you're going to write a check is to your home inspector. So again, that person is providing a service to you. So at the time that you schedule your home inspection, or at a minimum the day of the home inspection, you'll need to pay that home inspector for their service. So again, you're going to do that during that due diligence period. So once you go under contract, you'll have, you know, X number of days to get that home inspection done. So you'll write your earnest money check, and then, you know, within a matter of days, you'll be paying for the home inspection. Joe and Bakari could talk more about appraisal, but I know with many lenders, you have to pay for the appraisal up front. So again, that would be the third time that you're writing a check is for your appraisal. And then the final amount is the figure that you'll get from the credit union that says, okay, this is now the total amount of cash that you're going to need to close. And you'll get that from Joe or Bakari. They'll send you a breakdown of what you're going to need, but that's the information that you're not going to actually wire until usually about the day before closing is when you wire your cash to close. And I always, you know, tell folks to think of your cash to close as 3 different buckets. You've got your down payment bucket, you've got your closing cost bucket, you've got your prepaids bucket. But again, the guys at the credit union will break all that down for you, so you'll know in advance how much to expect. But just know that that last figure, the bulk of what you'll be coming up with, you won't be sending until about a day before closing. All right, so that's the money side of things. Like I mentioned, whether you're brand new at this or whether you've bought and sold before, it's always really important to know what's happening in the market. So if we can flip to the next, there we go. Okay, so right now, I know you guys, I'm sure, are aware that it's a really hot seller's market here in Atlanta. I know Joe alluded to this before, but I just love graphs and charts and data and things like that. So I wanted to share some statistics with you. So this is a 5-year history of the number of homes that have been for sale in Atlanta. And I just pulled, for ease of things, looking at all of Cobb County, all of Cherokee County, all of Paulding County. If you personally are looking in a different area and are interested in this type of statistical information for another area, by all means, I can certainly provide that to you. But you can see that things were pretty consistent in 16, 17, 18, even 19, not a huge change in the number of homes that were for sale. And then all of a sudden last year, you can see that things took a nosedive. And then again, from last year to this year, it took another nosedive. So for example, in Cobb County, the number of homes for sale just from the end of October 2020 to the end of October this year went down almost 29%. In Cherokee County, the number of homes went down by 26%. Oddly enough, there was a little bit of a bump in Paulding, probably due to new construction out in Paulding. The number of homes increased from the end of October 2020 to 2021 by about 7%. But you can see overall, there's still been over the last 5 years, continued reduction in the number of homes for sale. And like Joe said, it's a matter of supply and demand. So obviously the supply is very low in our market. And then the next chart we're going to look at is going to show the number of days on the market. So all of this is important to know when it comes to negotiating your offer and how to negotiate your offer. So again, you can see that the last 2 years, we've had a huge drop in the number of days that homes are staying on the market, to where all 3 of these counties, Cobb, Cherokee, Paulding, these are median figures. You can see homes are staying on the market less than 10 days. And this year, as of the end of October 2021, homes were staying on sale on the market. In Cobb, median was 7 days on the market, Cherokee 8 days on the market, Paulding 6 days on the market. And honestly, they probably had offers even before that amount of time. So what that tells us is, when you do decide that you're going to be looking for a home and you find the home that you're interested in, you really do have to be in a position to act very, very quickly to have a chance to get that home. And again, that's why it's so important to not only be pre-qualified, but pre-approved ahead of time. And then the last chart that we have, and again, this won't be a surprise either because of supply and demand. Our supply is so low. Therefore, obviously, our median sales prices are continuing to climb over the last 5 years and have definitely jumped again from just the last 12 months. In Cobb, we've seen about a 15.7% increase in the last 12 months. In Cherokee and Paulding both, I mean, a huge jump, 22% in Cherokee, 21% in Paulding. So prices have definitely risen over the last 12 months. Economists are saying, and I'm not an economist myself, but I just hear and read that 2022 is probably going to look similar to 2021. The difference is it's also anticipated that rates are going to start creeping up a little bit. I haven't heard that there's supposed to be a huge jump in rates, but I've heard that rates could go up by, as much as 1% by the end of next year, by the end of 2022. And prices are expected to continue increasing as well. Goldman Sachs says about another 10 to 16% increase in the next 12 months. And a lot of times people ask me, well, do I need to wait? Do I need to wait until, the market conditions change, until there's more inventory, or should I go ahead and buy now? And, one thing that I always tell people, think about the whole picture. There may not be as much inventory and we may have to be creative in our offer, which we can do. We can be creative in our offer to, help you, win that deal if you're trying to compete with other offers. But keep in mind that if if interest rates go up even as much as 1%, which doesn't sound like a lot, if interest rates, this time next year are 4% as opposed to 3%, which is what economists are saying could happen, that additional 1%, if you're looking at a $300,000 mortgage, and Joe, correct me if I'm wrong, but I'm calculating you're talking about an extra $166 a month in your payment just because of that 1% interest rate. And you'll qualify for about $35,000 less based on that 1% increase. So, again, home prices are continuing to rise, but rates are supposed to rise as well. So that's why I tell folks, if you're in a position to go ahead and look, I wouldn't necessarily wait. And obviously everybody's situation is different. Everybody's circumstances are different. But just generally speaking, that's my recommendation. So again, I thank y'all so much for listening and for your time this evening. And thank you for having me.
Thank you so much, Rebecca. That was awesome information. We did have a few questions that came through while you were presenting, so I will go ahead and ask those now, and whoever is appropriate can chime in and answer those. So the first one is, how long does the pre-approval process take? Should I get it now if I'm going to be looking to buy in March or April?
The pre-approval process literally takes, like 5 minutes over the phone. And what I tell our members is the pre-approval is good as long as you're good. So if you go bankrupt tomorrow or have a foreclosure, then the pre-approval is no good. But typically, as long as everything's status quo, the approval is good for 4 months. We can update it if needed. And we've done that before just because of how the market is, that people can't find houses. I've had people call me a year later and say, you did a pre-approval letter for me last year. I need to get another one. And so I just update it. So that does happen. But yeah, it doesn't take very long. And we will keep your information on file and just update it as we go forward if need be.
Okay.
And I'd like to jump in too and just say, again, a lot of it too is how fast you provide the documentation that they're looking for. So, how fast can you get your pay stubs and different things over to the credit union?
Okay. Also, if someone is purchasing a home from a family member, should they get a realtor?
That really depends on the situation. So I actually represented a mother who bought a home from her daughter this past year, just because they felt like they wanted to, kind of keep that, business and family. I would say though, probably more often than not, most people in that situation probably do not hire a realtor, to be honest.
Okay, thank you. The next question is, what is the lowest credit score that you can have to be a first-time home buyer so that they can start the pre-approval process?
The lowest credit score that we look for is a 640 middle score. A 640.
Okay, that's the goal to be at least 640 or higher. The next question is, how long is the due diligence period?
That's a great question. So that is a negotiable item. And it used to be, before the market got so crazy, a 10-day due diligence was pretty typical. Nowadays, sellers that are getting multiple offers on their homes, they want that due diligence period as short as possible. So it's kind of a balancing act, because obviously we want to give the buyer time to get everything done that they need to get done and feel comfortable in going forward. But if a seller has 5 offers and 3 of them have 7, 8, 9, 10 days due diligence, and then one of them has a 3-day due diligence and one of them has no due diligence and just a right to request repairs, all other things considered, the seller is going to take either the 3-day due diligence or the no due diligence with right to request repairs. So it really is a matter of situation. If there's absolutely no other offers on the property, then we try to get as much due diligence as we can, which would be, 8 to 10 days. But in some circumstances, if it's a competition situation, we may have to talk about reducing the number of days, but how we can still protect you as a buyer in doing that.
Okay, perfect. Thank you, Rebecca. And one last question before we move on in the presentation. We have a member here that is a first-time home buyer, but within 10 years of retirement. Is it a bad idea to purchase a home and carry a mortgage into retirement?
Oh boy, that's a tough one. I guess it depends on your retirement. I would talk to your financial planner. The credit union has a financial planner as well, but I guess it just depends on how you have your finances set up for retirement, whether you get a pension. Hopefully Social Security is still there in 10 years. I mean, the goal would be not to have one, but it's not unusual to have one.
Okay. Thank you. Now we are going to turn it over to Alan Rainwater and have him talk about the home appraisal process. Alan, you may be muted. You may need to take your phone off mute. Alan, it looks like you're still muted right now. Okay, I apologize.
You want to do it over the phone?
I can't, I won't be long, I'm sorry.
Okay, you're fine. All right, go ahead. This is Alan Rainwater, our appraiser, via technology on a cell phone.
Yes.
I'm sorry for that, I had you unmuted earlier, but then it won't unmute. I do not have many fancy screens, but I've been in the business over 30 years and worked with Joe many of those in Georgia. And as a home buyer, you probably won't see me, because I will come to the home that you are buying, and you won't be there. Usually either the seller or the agent, or if the home's vacant, no one would be there. I come in and do the process of looking at the home, seeing the dimensions, the rooms, the bathrooms, the bedrooms, the condition, and then I take that data back and compare it to other homes that have sold in an area of similar condition, and do a report and prepare it for the credit union and send that to them. The credit union will then forward that report to you. All reports that are done in the state of Georgia are returned back to the borrowers. And that is my process. We look at the most recent sales, especially as Rebecca talked about in this market. We gotta look at the last 90 days if possible, or 6 months at the most. But going back any further than that would be a false narrative on what the true value is, because of the market being so close, go into contract and such. And that is my process. I'm not
Home inspector, which is different than what an appraisal does. We assume most of those things are working.
Oh, sorry. We can hear you now, Alan.
Okay, good. Sorry about that. I'm gonna turn Joe off.
Yeah, okay.
Please do. Now, Alan, let me ask you a question while we're doing this. Out of, just hypothetically, out of 10 appraisals that you're doing, how many of those are coming in at or above the contract sales price? Because with this market being still red hot, are you having homes appraised less than the sales price? Let's just stick to the phone.
Yeah, sorry. We're going to call you back. Sorry about that.
question. No, very few, because the market is so responsive.
Okay. So will you, in a perfect world, would you wait for a recent sale to show what the value of the house is?
Yes, and with the MLS, it is so good to report recent sales as far as sometimes 48 hours after.
Oh, wow.
So we can use those. I used the sale today for a closing in November, and we're just a couple of weeks in November. So that's where we are.
Okay.
Can you hear me?
Yeah. All right. Do you have anything to add?
No, I don't.
Okay.
All right.
Thanks, Alan.
Thanks, Alan. And I saw the comment that just came up from Kirk, and we will definitely send you the information on our financial planner here at the credit union. We have a no-cost financial advisor that you can meet with that can assist you with different things. And so we will definitely send Mona's information over to you, Kirk. The next person, Joe's going to wear the home inspection hat real quick. So the person that we typically have doing home inspections, he is so busy right now because of all the homes going under contract that he couldn't be with us tonight. But Joe's going to cover the home inspection process for us.
Okay, thank you. And just real quick, home inspections are different than home appraisal. And the best way to think about that is a home appraiser, which is Alan, he will tell you what the home's worth. A home inspector will tell you that the door squeaked, and it's going to, and it would, and whatever it costs to fix it, he would give you some type of estimate to fix the squeaky door. So I kind of use that as an example, but a home inspector will do a lot of things. I tell people it's kind of like an insurance policy. You don't want to buy someone else's problems, even in a red hot market. You don't want someone else's problems just to have it. But I mean, if you're that type of person that's handy and you can, you know, fix air conditioners and fix plumbing and do that kind of thing, that's one thing. But if that's not your day job, I wouldn't want any major repairs on a home, you know, done individually. You'd want a professional to do something like that. But anyway, home inspectors are certified they have 2 listings. They're either a CABO certified, CABO, or they're ASHI. And ASHI is ASHI. That's the 2 certifications that appraisers have. And I tell people they use that to pass the bar. So in the state of Georgia, I could be a home inspector and you could be a home inspector. But in order to get one of those certifications, you have to pass numerous tests. And our home inspector, Tim Reed, it goes into detail about that. But I can tell you, ASHI stands for the American Society of Home Inspectors. And I just looked this up, but CABO, C-A-B-O, is the Council of American Building Officials. So there's your 2 certifications. Make sure your home inspector has one, if not both of those, because you just don't want anybody looking at your house. They'll come out and, you know, collect $400 or $500 for, you know, a job that's poorly done. And if you find things in the future that the home inspector did not find, they're only liable for whatever you paid them. So they'll be more than happy to give you your $500 back if they totally botch up your home inspection. But make sure you find a good home inspector, and Rebecca will make sure that you have one as well. And yeah, here's some reasons why you have a good home inspector. I mean, that's actual photos. They're not doctored. But just, it's kind of sad about what's out there. So just make sure you know what you're getting yourself into.
Okay, and now we will turn it over to David with Phelan and Sherman and Phelan to talk about the real estate closing process. David? You may be on mute as well.
I'm calling.
Yeah, we are calling. Oh,
Hey, can you unmute? It says he's off mute. Well, you can just, you know, we'll just do it this way. You're live. This is David Sherman, our closing attorney.
I swear I know how to use technology. All right, so the closing attorney, you can see the list of the 5 main things that we do there. We title search, conduct the closing, disperse the funds post-closing, and issue the title insurance and file the deeds. So basically the process is once we receive the signed contract from the real estate agent or from the buyer and seller, as well as the title order from the credit union or the lender, we'll set up a file, send out an introduction email just so everybody's on the same page, set up a file, and then we'll start the title search. The title search is really one of the main or most important things that we do. We confirm who, in the case of a purchase, who the seller is, what liens are on the property, such as a mortgage, if there's any HOA dues or liens that are out there, and then also identifying what taxes may be due. This time of year, it seems like there's, from September to October, November, there's tax bills that are out that are not necessarily due yet. They may be due like November 15th. But if you close in October, that tax bill is out and it's considered due. And so that's something that would need to be paid at closing. And then we prorate, the portion of the year that the seller was in the property, the portion of the year that the buyer is going to be in the property, things like that. And then paying off the previous owner's mortgages is a big deal. So we'll order a statement from the previous lender to make sure that when we pay them that amount, that they have enough to pay off that loan and then pay off the lien or cancel the lien in the record books, so that when you own the property, there's no liens on the property. And then we conduct the closing. So we'll coordinate with the real estate agents, the seller, the buyer, the lender, to schedule a time and a place for closing. And as Joe mentioned, that can be anywhere from 10 days from the time, that's moved pretty quick, to 30 days. And really, our title search, from the time we get the order, we're turning that around in 3 or 4 days, assuming that there's not any issues that need to be worked out. So we'll get all the necessary documents from the credit union. There's a lender package that's sent to us. We'll create a closing disclosure, which is a pretty simple 6-page document that has all the terms of the loan, your monthly payment. It'll talk about how much you need to bring to, if you're a buyer, how much you need to bring to closing. The seller's closing disclosure will discuss how much they're going to receive as proceeds from the closing. And you're required by law to receive that 3 days before closing. So there's not going to be any surprises at the closing table. So that's actually one of the nice things. The closing disclosure is only 5 or 6 years, that requirement. And as Rebecca mentioned, that'll give you enough time to wire the funds to our office. We collect all the funds from the lender. We collect the buyers, what they're bringing to closing, earnest money we collect. And then at closing, we disperse after we sign all the documents at closing. As Joe mentioned, 25, 30 minutes at the most. We will disperse everything. So we'll give the seller their money, the agents get their commission, the payoffs go to the owner, the seller's lender, and all that's sent out the day of closing. It's wired out, as soon as we get up to the table. Title insurance is sometimes a little confusing, but there's 2 types. And when you buy a house, you're going to see 2. Lender's title insurance, which protects the lender in the event that they have to foreclose. They want to make sure they have clean title. The owner's policy protects the buyer. And it is optional, but I would recommend it. For the price, there's really no reason not to get it. And what it does, it ensures that the new owner is the only owner of the property. It also ensures that any previous liens that may not have been disclosed in the record books, any heirs in the past, if there's a husband or wife on title, the wife dies, the husband just sells the property to somebody else, the wife's estate's never probated properly, technically her estate would still have an interest in that property. So by buying title insurance, it allows you to just say, hey, title insurance company, this is your problem, fix it. I paid a premium at closing, and then they take their attorneys, take it from there and make sure that you have clean title. So like I said, it is an expense at closing, but for the amount, it's 100% worth it in my opinion. So you'll see that as one of the charges on the closing disclosure. One of the you've got the lender's fees, our attorney's fees, and then you'll see title insurance. And then also, as Rebecca mentioned, there's the prepaids, which is tax prorations, HOA prorations, things like that. So then after everything's signed, we'll file the warranty deed, which is the actual ownership deed that transfers title from the seller to the buyer. And then the security deed, which is the mortgage, which is the lien that the lender puts on the property to put the world on notice that hey, there's a mortgage on this property. And when we do a title search, we'll look back and see those security deeds from the previous owner and say, hey, this is a mortgage that needs to be paid off. Unlike a car loan where the lender actually holds the title to the car until you pay off the car loan, Georgia is a lien theory state, which means you have the title, you own the property. They just put a lien on the property until you pay off the loan. And then once that warranty is recorded and returned to us, which it's been a little slower these days, it really doesn't matter. You don't need the original warranty deed in Georgia. A copy, it's public record, so a copy is kind of proof of ownership. But we will get you back the original warranty deed, which you can hang on to. And I think I moved pretty quick there. I think that's everything. I'm certainly open to questions.
Okay. Oh, we have a question that
Thanks,
just came
David.
in. Would you still recommend getting a closing attorney when you're buying a house from a family member?
No, yes.
Yeah, absolutely.
Go ahead, Dave.
Yeah, go ahead.
Yeah, basically, so it's really just the dispersing of funds. And so your family member is going to most likely have a mortgage on the property. In that situation, if you're not using a real estate agent, our firm can create a contract for you guys to sign. Joe and any other lender is going to need a contract to give a loan. So by contacting a closing attorney at the beginning, and on our website, you can get a for sale by owner contract or a questionnaire that will generate a contract for you. But beyond that, it's the dispersing of funds. It's making sure that I get a payoff. It's doing the title search. It's all those things. So I don't know that closing attorney, in my opinion, is required for everything.
Yeah, I was gonna say, David, it's a requirement to have a closing attorney do the transaction in the state of Georgia, so.
And beyond that, it's a legal requirement too. I mean, you could, if there's no mortgages on the property and you're not getting a loan, you could theoretically have your dad sell you a property, you just give him cash and sign a napkin, if you wanted to. That doesn't require a closing attorney, but with a loan, it's 100% required.
Okay. If there's any more questions, definitely put them in the chat right now. We still have our experts on the line and we can answer those right now. Oh, one more question. How long should a person hold a owner's policy?
So, go ahead, Dave.
Yeah, you buy the owner's policy at closing. It protects you against everything that happens prior to your ownership. So I would hang on to that until you sell the property. Now, again, the original is not a requirement. You can get a copy of it. You can scan a copy of it and keep it. It's really just kind of like our insurance policy where if you know enough details about it, you can get access to it. But yeah, so and sometimes people ask questions like if they put a lien on the property, does the owner's title insurance protect them? It's everything that happened prior to you purchasing the property. Just theoretically, everything beyond that is your fault.
Okay.
And is it bad to get a new credit card within a year of buying a new home?
No, you just don't want to, you don't want to take out a new loan prior to closing on the new house. Once you close on it, then you can do whatever you want. But let your lender know if you're doing something before you close, let them know, hey, I just bought a new car and my payment's $300 a month. You'll still be able to qualify. If not, the lender will say, hey, no, don't buy the car, So just let them know what you're doing.
Being a lien owner state, will the lien change credit report after the purchase?
Very state will the lien, so it'll still on your credit report after the mortgage is given. It'll be
After the loan gets recorded, and then
trade line.
And then the creditor will report that as a trade line. And it takes maybe 30, 45 days for that to show up. But David, when will the lien show up on the house?
Yeah, so we'll file the security deed, the day of closing, or we'll send it in the next day. It really just depends on the county for how long it takes them to record. Cobb is about 2 months behind at this point. But technically it's a lien on the property the day you sign it.
So if I walk to the courthouse the day after you send your lien in and I put a lien on it, does it matter? Does your lien go first and then mine would be second? Or
so there is a gap period, but theoretically, if I sent mine in and then you went the next day, they're going to record it the day that they're supposed to intake them all in order.
Okay. Okay.
So yeah, I wouldn't worry about that.
Okay.
Will my credit score drop dramatically when buying a new home?
No, usually it'll drop some, but not much. So you should.
And then as you make payments, your score will actually increase because you're paying a large loan back in a timely fashion.
And then we just have a few more tips on purchases.
Okay.
Um,
So Rebecca alluded to that. Everything on the contract is negotiable. The price, the closing costs, repairs, things like that. So don't feel like, well, I guess I have to do that. It's all negotiable. The due diligence period, that's a good idea as well. The way home inspectors are now, it's taken them a while to get out to the house. So you may need a little more time, but your realtor will help you out with the due diligence for the home inspection. Yeah, and I think Rebecca alluded to that, make the contract contingent upon a satisfactory appraisal. That's kind of like I tell people it's kind of like a get out of jail free card, that if something happens and you're not happy with the home, then you can get out. And Rebecca, correct me if I'm wrong, but I think is it 8-day or 10-day where you have that kind of get out of jail free card?
Well, that's one of those things. It just depends. We try to get as much time as we possibly can, and we can get, often as much as 10 days if we're not negotiating against a bunch of other offers. But if we are in a multiple offer situation, then I would, or have your realtor talk to you about, what that means, and, whether a shorter due diligence is going to be in your best interest in that case.
Yeah, like Rebecca said, all the normal, quote unquote, normal things that used to be on, it's kind of thrown out the window just because of the market that we're in. And that's one of them. So.
Right.
I will say that the title search work that the closing attorney is doing is outside of that due diligence period. The seller is required to warrant good title to the buyer. So if 2 weeks before closing, even if you're 10 days past that 8 to 10 day due diligence period, if the seller can't sell you the property because there's these liens and they're just not, whatever, you're not going to have to buy the house, because if something's on title that doesn't allow them to sell market title to you, don't think that you have to have a title search back and everything done within that due diligence period.
And from a home standpoint, if you look at the house on November 1st and everything's in great condition, and then you do a walkthrough on November 30th and there's holes in the wall and the carpet's ripped, and you don't have to buy the house. You get your money back. They're not delivering to you what they presented to you on the first day of the month. So don't feel like you're stuck with their problem.
And I'm going to jump back in and say too, so your financing and your appraisal, those are separate contingencies from your due diligence period. So you've got a financing contingency and an appraisal contingency that would protect you if your financing fell through or if the home didn't appraise for at least the purchase price. And those time frames are typically longer than your due diligence period.
Okay.
And do you have any contractors, home inspectors, et cetera, that would work with you that are able to recommend if we do not know of any?
Yeah,
yes,
yeah, absolutely. Just give us, Bakari or myself, a call. We're more than happy to give you Tim Reed's phone number. He's a really good home inspector. If not, there are other ones. Or check with your realtor, and they'll have some home inspectors that they like to use.
Yeah, we'll add Tim Reed's information to this presentation before we send it out later this week. Just a few more tips before we close tonight.
Let's see, if repairs are needed, have the seller do them and have it paid to a contract. Just that's probably a good thing to do. If the seller says, well, I'll fix the squeaky door, you might be better off saying, well, I'd rather have a real person fix the squeaky door kind of thing. So a lot of times they'll put a Band-Aid on it when it really needs stitches, so to speak. We talked about the intangible tax that the credit union can save you money on your closing costs there. That's at a rate of $3 per thousand. So on a $300,000 house, that's $900 of additional closing costs you have at the credit union that you would have every place else. David Sherman will review your contract prior to you signing it and go over it and make sure that if you're happy with it, he'll do that free of charge. And like David said, he would write the contract if needed. Last thing we didn't talk about was a survey. A survey tells you the boundaries of the property. Here in the state of Georgia, it is not a requirement to have a survey. If your intention is to put a pool in or put a fence in or do anything like that, go ahead and get a survey done. And that's outside of closing. They will mark your property so that when you're ready, you can put your fence in or put your pool in or whatever you want to do, add a driveway. Real important to do that. I can't tell you how many times, and Dave will probably back me up, but how many times that someone builds a fence or a pool on your neighbor's property. It does happen, so just make sure you're protected. And then there's some additional things, real estate, that's kind of an old thing when it was foreclosures. They're kind of you can't even find a foreclosure now. But
They don't exist.
yeah, a lot of that stuff we kind of went over.
Okay.
And there's our information.
Yeah, so we will send all this out to y'all. Like I said, later this week, we will have everybody's information. We'll also include Tim Reed so that you have a home inspector's information as well. But Joe and Bakari's information, their email addresses as well as their phone numbers are on this slide, as well as a link to the mortgage webpage on our website. You can start the application out there. It's a really simple process. So we're just trying to give you all the resources that you may need throughout the process. But if you have any more questions, what happened to all the foreclosures? Great question.
Yeah.
They all well.
Well, the way the loans are now, you've got to be qualified to get home. And with the increase in value, I was telling someone earlier, if you start going down the tubes, people just sell their homes and get out from under it, and they have equity in it. Foreclosures are, knock on wood, they're nowhere to be found.
And if they are, investors are buying them with cash instantly.
Instantly, yeah.
Okay. All right. Well, this concludes the home buying seminar for this evening. Thank you all so much for attending.
Thank you.
Like I said, we will send you a link to the video. We'll upload this on our YouTube channel here at the Credit Union, and then we'll also send you a link to the presentation. And if you have any questions along the way, definitely please feel free to email us. And we hope y'all have a great evening, a happy Thanksgiving, and a Merry Christmas.